Hi, I'm Eric Wymore with Metcalf Partners Wealth Management, and this is this month's version of Metcalf Money Moment. It's election season and it's about over. Maybe by the time you watch this video, it is over. But I'm certainly ready. I think everybody is. It comes to the point where you're a little exhausted of the TV ads and the signs in the yard and everything else. But it's also a time of year where we get a lot of phone calls from clients that are concerned on both sides of the aisle. They're concerned if this person gets elected, what will happen to their money? And then a few minutes later, we get a phone call from someone else that's getting concerned if this person gets elected, what will happen with their money? And so I wanted to take a moment to share with you an article that I received from T. Rowe Price. T. Rowe Price is one of the country's leading money managers, and they had a good piece about what happens to the stock market performance up to the election and then after the election. So I'm going to share my screen real quick. And here we are with the election with an incumbent party that wins, as well as an incumbent party that loses. Obviously, we've already gone through 1 year prior, 6 months prior. But as you can see, kind of 3 months prior, 1 month prior, leading up to the election, if the market is positive, generally speaking, that means that the incumbent party will win. If the market is down, generally speaking, that means that the incumbent party will lose. But there's always what happens after the election that I think is most important. And you can kind of see that they're kind of a mean reversion or reverts back to kind of the trend. So if you have this incumbent party that wins, usually after the election, you're going to see some choppiness and probably a little bit of a decline, kind of back down towards the trend line, so to speak. The same goes if the incumbent party loses, where after the election, you're probably going to have some positive conversations, kind of a center kind of a discussion, and usually that leads to a little bit more optimism in the market, and the market kind of reverts back to the mean. But as you can see with both situations, uh, 3 months, 6 months, 9 months, 1 year afterwards, the market still does perform. And it kind of goes back to what really drives the price of the market or the price of the stocks. And the refocus is on earnings. Are the companies making money? Are they keeping margins? Are they expanding margins? Are they coming with new products to the market? Are there good economic conditions? Where are the interest rates? What's the sentiment? What are the technicals? That's what really will drive market prices. It's not going to be who gets elected. Certainly adds some volatility in the short and near term, but after that, it's going to go back to market performance on basically what kind of revenue the companies are making and so on. Obviously, it's a hot button issue right now. Hope this helps. If you have questions or concerns about your portfolio and how it will perform, please reach out to us. Again, my name is Eric Wymore, and I'm with Metcalf Partners Wealth Management. Thanks.